Welcome to the Trading Lounge, and here we're looking at the US 30, and as you can see that it's moving down. There was selling yesterday as well in front of the Fed's meeting, which was this morning at 6 o'clock, and I've had computer problems this morning, so I haven't had a chance to catch up on the news, but obviously nothing sort of positive for the market side is actually coming out of that, as you can see here. And what I did notice sort of earlier this morning is that from this high here, we've had 5 waves down to this point here, then a bounce, and obviously we're seeing another third wave down here. So if we get a larger 5 waves down here, which is probably the case, then we'll see another 3 waves counter trend and further to the downside as well. So that would leave the S&P 500 back at the 1500 here as well, because we need to count a larger 5 wave pattern impulse wave to the downside through here as well. Because the Feds aren't doing anything, we're seeing, so the news goes anyway from yesterday, is hedge funds pulling out of some of the commodities, and as you know, we've seen the precious metals roll over, and then we're watching the base metals and copper rolling over as well, and that's moved through to the oil market as well, and obviously into stocks and to currencies now as well. So we really need to protect until we know what this corrective move is, then we need to protect long profits and get a few short trades in sort of ASAP. Right, and the same with the Australian market as well. But really it's not a strong sell-off here as such. We've also got a lower Australian dollar as well. Obviously that benefits some and not others and so forth, so that will balance itself out. But the target point up here was the 5,100, the first minor level, and let's just see how this unfolds. But it does appear that we're getting a impulse wave down to the downside here. So if the commodities are going to drag, the banks and the industrials are quite strong, but this can certainly come back down to the 5,000, creating the first high above the level, which is normally the case. If a market shoots, above 5,000, it goes to the next strongest number, which is 5,100. The European markets as well. The FTSE here, the target for the upside here, as you know, we're looking at 6.4 in the short term here, and we're tracking this little 5-wave structure up through here, so that would be in place there now as such. So we'll see a larger correction unfold through here if it's going to follow the US markets, but make sure you cover yourself on that one there. And pretty much the same with the DAX as well. Let's get a chart here. Obviously, for the people that know the trading levels, the number 8 here is a profit-taking number, so we would have been gunning towards that, but also the 72 here and the 772, as I mentioned yesterday, would have obviously been the target for that there. So let's just see how that goes there. Now, this particular correction here, as I mentioned yesterday as well, is that this move down through here could actually be still labelled as the A wave, but also wave 1 as well. And then we're looking at this B wave here, and we're looking at this B wave in a possible A, B, and C there. I still don't think that's the case, but it's something that we have to look at as such. So. So let's just see how that goes. Let's see what sort of downside we get through here. If it's just going to be an A and a B and a C down through to here, that's fine. But a move under the 7650 as retested resistance, which is the balance line through this correction here, then it's certainly bearish connotations from that point there. All right, let's have a look at the commodities and the US dollar, because that's the sort of the driver behind this at the moment. Okay, I'm just starting with copper here, because it's essential to base metals, and we've been sort of watching it sort of unfold. We understand gold and silver and precious metals are the first ones to roll over, and this is the second one to roll over. And then we're seeing oil, and then we're seeing the stocks doing the same thing as well. So we can, there'll be leaders and followers. So if we consider what's happened in gold, then we can pretty much expect the same in this market here, and also the other markets to follow as well. So that's why it's important to change from being long to being short here. So in this case here, you can kind of see where we are in a way, because we've got this down for one here, as we've been following back for wave 2, then wave 1, wave 2, wave 1, and wave 2, and so forth through here. We're unfolding out. So there's still, this is we're sort of deep in the third wave here as such, but there's still a lot more to unfold through here as well. I thought there'd be a bit of support here because of the old support level here. It's around 360, 359, but it is the 350 that we would be sort of looking at in this structure moving down as the next reasonable point of contact as well. It will depend on how this extends out through here. And gold is really extending to the downside, so we can probably expect that. But as I mentioned the other day, we were looking at like way down here at 300 here for this market here, because it's part of a larger triangle pattern. So look, that's quite central to base metals, and the material sector globally. So really need to take that on board. And the Australian dollar has got a sort of 80% sort of relationship with the with copper as well. I mean, that can fluctuate a bit, but that needs to be brought on board as well. So the gold market, I've just got the daily chart here because it's just to sort of see it a bit closer now. I thought there would have been some sort of consolidation in around the this group 2 area here, but that's not the case. It's just sort of moved through that. But what I wanted to point out here is that this has still got further to go to the downside through here as well. But we are we'll start to look for a low now, even I know that it's coming down strong here, but from this point here, the 1, the 2, so we've got this strong third wave, and we'll have a fourth and a fifth wave unfolding there. I just want to have a look at the, just bear with me a second here while I have a look at the gold market as such in Australia, the one called gold. So this is it here. I just bring this over through here. Excuse me, not really organised. I've been a bit preoccupied this morning. So this is the Australian gold one from daily chart here, and of course there will be the medium level through here as well. But what I wanted to sort of point out with this pattern here, which is similar to the one that we're looking at on the the spot market. So. But just here you can see that we've got quite a clear 5-wave structure down through here. So that's what we'd be looking for as such in here. So in this wave structure, which is going to be a little bit difficult to see within here, but we'd also be looking for a 5-wave structure in here. Now, one of the things with commodities is that it's the 5th wave normally has the extension in it. It can be the 3rd wave and it can be the 1st wave, but it's normally the 5th wave that have the extension in it. So that's something that we just need to be a little bit sort of mindful of in this particular case here. I just want to check this structure here. Actually, that's making the 3rd wave the smallest. So in this particular case, then this 5th wave here should be smaller than the 3rd wave here. So if we bring that up to the length of the 3rd wave here, because wave 3 can't be the smallest out of the 5-wave sequence here, so we can look to that. So we can still look down to 144 here as such, between 144 and this old low here. I think that's it's important to understand this, because obviously the Australian mining companies, would be influenced that. So looking for a low, basically, even though it's cranking down hard, so just to sort of point that out. The oil market here, if we have a look at just find the bigger picture here for a moment. Just bear with me. As I mentioned, I was a little bit sort of disorganized here. This is the daily chart here, and we've been in the situation where we understood that we've got this wave 1 up here, but this wave 1 up here can also be an A wave and a B wave as or wave 2 and a strong third wave for the C, wave 3 or C here, which would make up a larger triangle picture that we've been working through. If I just squash all this up, just bear with me here, a bit like the Australian dollar really. So we've got this strong triangle picture here, which is the A, the B, the C, the D and the E here, or even in fact this can be an A and a B and a C here for the C wave here, for the D wave here, but one way or another it still can come down to this alternative E wave over here as well. So it is possible for that, and that's something that we really need to bring on board a little bit more now, simply because of the of what's happening with the commodities as such. So within this view here, if the 95 becomes their retested resistance, then we need to take that on board. So you know, this chart's not labelled, but we were looking at this being an A and a B and a C wave coming down through here and pretty much finishing here, and that could be the case, but what does throw us out a little bit here is that you know, we were expecting this to be down for 1, back for 2, down for 3, and then a fourth wave here, but this fourth wave is pushed, you know, a fair way up through here. It's more like it's just something sort of it's not something, there's something not quite right about this situation here. So just leave us a little bit of time with that. Let's just see how it settles into the 95 here as support and resistance. You know, after a trend, there's a counter trend and so forth, and so there'll be a bit of a correction across here. But if it looks like it's going to lock under the 95 here, or going to come up and spend a bit of time up here, but one way or another, it will find this as support or resistance, and then we'll look to trade it from that point. Right, let's have a look at the FX. Okay, starting with the US dollar, the main point is, and always has been, is the simple fact that that the market is above the 80. So it's, even though we're looking for a high, being above the 80 creates a positive bias in the market, and that's a good thing about the trading levels. It separates the errors in Elliott and keeps you on the right side. What we couldn't understand the other day was this little situation through here, because this looked as in we're looking for the 1, the 2, the 3, the 4, and looking up for the 5 here. But this move up here, started to go in 5 waves, which it should have done, but it only ended up in 3 waves. So we have to call this one down here an A wave, this in 3 here for a B wave, and this in a C for for the C wave. So we can see, looking at this here, because of the Fed's meeting, the it's really expanding to the upside here. So when I look at this a little bit closer here on a 15-minute chart, you can see the strength coming out from the Fed's comments here. So we can see that even in looking at this this would be a little third wave in here. So there'll be a little fourth wave in here, which could pull back a bit further here, but it should work its way further up through here. So we can expect further upside in this market as such. The bonds here, they haven't, US bonds, they haven't moved up as much, so I think that's interesting. So we can still be looking for a high in the US dollar. We just need things to settle somewhat, but the bonds haven't moved up that much as well. So we'll still stay with this particular pattern that we've got here for the time being. Only move above the 144 would, as support, would see a stronger market as such. But while it's under this important level here, then we can still stay on track with our wave counts there. So the euro here, it's definitely got a bearish connotation to it as the US dollar is pushing up, as you know. The trend line support through here comes in around the 132. So that's the first thing to look for in terms of support there. That said, in this little section here, this strong move that came down through here while the Fed's meeting was pushing up really left this into 3 waves here like we talked about yesterday. Now this could have developed into 5 waves up through here, so what we're looking for is we're looking for support on the 134, tested support. You know that when you're working with the levels you don't take the breakout through a number because it's 90% chance that it's going to come back and retest it, and that retest failed and continued to move down further. So that secondary support that I mentioned is at 132 there, so we'll be counting 5 waves from this section down to this section through here, so you can see that on the smaller charts on the website. The Australian dollar, just having a look at the bigger picture here first. Okay, so just go back over this a little bit. This is a daily chart here, and this whole thing through here across the $1 mark here is still the triangle pattern as a wave 4 that we're looking at. We know that we know that all this is a large correctional pattern simply because the first move down from the high at 110 here is in a very clear 3 waves. So that's what a triangle is. It's 5 waves across like this. Each wave within that would be 3 waves. A triangle, it normally occurs in a 4th wave, and this is essentially what it is. So we've got the A, the B, and the C for the A, then we've got the A, the B, and the C for the B wave here, then we've got the C wave down here, then the D wave up to here. So now we're looking into the E wave over here, and that will also be in 3 waves as well. So we're looking at an A and a B and a C wave down here. Now C wave in this case here is in 5 waves, so we'll be looking at this being down here is down for wave 1, back for wave 2 here, as you know, and we've been working through this little ABC through here. We thought that it might come a bit higher to the 104 area, but that's not the case because of what's happened in the commodities market, with probably hedge funds pulling large orders out. So this 3rd wave would be starting off now as well, so that's what we'll be looking at. The 3rd wave should be longer than the 1st wave through here, so that's what we'll be tracking now. So just bring this into Q here a little bit. So look, as you know, we're looking for the A wave, the B wave, and the C wave moving up here. Now it's possible to count 5 waves in here. That's not such a problem. We knew yesterday, as I mentioned, the resistance would be the 103.72 or subgroup 2 area. Never found support on top of that, so you wouldn't have gone long at that point. So this can be the A, the B, and the C here. If there was going to be a mistake made in this correction, and we need to look at all the possible counts, is that this would stay as the A wave here, but this would be an A and a B and a C for the B wave here, and then we would have a C wave up as wave 2. So that's a real possibility. I don't think it's the case. So what we'll do now is that if this is a C wave, it's going to be in 5 waves. Otherwise, we'll look at this as being down for wave 1 as well. And then in both cases we'll see some move up there. So if it moves up in a counter trend and fails, it might move down to here first. We'll need to look at that, and then move up in 3, then it'll be moving down as well through there. So we're going into the 3rd wave, and it's certainly got the personality of a 3rd wave, coming in exactly what it should be doing. In the 3rd wave, of course, coming down from wave 2 down to wave 3, there'll be 5 waves in that structure as well. So we're looking for the low of wave 1 at this stage here. There's a fair bit to pull this apart a little bit. So that was the top of wave 2 there. So you can start counting this down yourself, down for 1, back for 2 here. Then we've got 5 little waves down here for wave 3. And then we've got wave 4 here, and then wave 5 is, it's really extending to the downside. So I've got up to this point, so I need to. So we're looking at the bottom of the first wave here. That could be it in here, or there could be a little bit more in here. I just need to pull this apart and see what this is. This is where the Feds come in, and it can destroy the wave structure somewhat or warp it. let's just have a look at that. But we're looking for the fifth wave down through here, so there may be another little push down through to here first. We just need to check on that. So just be a little bit sort of patient there. But what we'd be looking for is some type of three-wave correction back up, and then we can go in and short from that point there as well. So just wait for that to unfold there. Otherwise, you get trapped. So we want to get that 5 waves down, 3 waves back up, and then we can look to short that to the downside. Alrighty, well, that's it. But just to sort of recap here, and I just want to have a look at the Australian market here. And we talked about this the other day, maybe a day ago or 2 days ago, I can't recall, but we were looking at Rio and BHP, and this is Rio here on a daily chart, and we're looking at this coming into, well, 72 is the magic number, and it always kicks in. So it's kicking in now. But the main point here that I wanted to just to go back over, which we did the other day, this move up here can certainly be an impulse wave to the upside, still in a bull market as such, in terms of up for wave 1, back for wave 2. And then this is all of the third wave coming up through here. Don't worry about that spike there. But so third wave would be up for 1, back for 2, up for 3, back for 4, and going up to 5. And there can be another little push up there as well for that, because I can see 1, 2, 3 and 4 and 5. But if that drops back down through here, then you know that that's done and dusted from there. But the other point is that so we can view this as a 5-wave structure as such through here, and it would be like this. And if that is the top here, or there's another little top there, doesn't matter. If there's going to be a wave 4, there would be a wave 4 down to the wave 4 1 lesser degree down to here. So it would come down to here, and then it would move off from that point to create wave 5 up there. And the interesting thing is that if we do get 5 waves up through here, then it's possible to get another 5 waves after that as well. So, but on the downside, on the negative side of things, and this is what we need to work through, is that this move here coming up here can be what we call an ABC correction. So the A and the B and the C wave up here, because the C wave is always in 5 waves as such, so that would be the C wave in here. So that can certainly be a top there, and that's the same for BHP as well. And this is why we've got to be mindful here as well. So from this point here, we can say that this is the A, the B, and then the C wave is the either to here for 1 and back for 2 here, or up for 1 to here, back for 2 to here. The third, definitely the third wave, the fourth wave, and the fifth wave here. But the fifth wave does seem a bit unfinished as well, because this still seems like up for 1 and back for 2. And then you can see the little 5-wave structure here, up for 3. So wave 4 would be back into here, then wave 5 drops. So I still feel there's some more to go here. But if this, if this moves down sharply through here and starts to overlap this structure here, or the top of the 38 really, then you know that there's this more serious top in play there. So a move under the 38 would create overlapping wave structures here, and then we know that would be being pulled down by the commodities. Such. So yeah, just thought I'll sort of point that out. So you need to take that across that whole sector there. So yeah, good time to lock in profits, because you can always get back in. Alrighty, well that's it. So good morning and good luck. And sorry that the report was a little bit rushed, because I was sort of way behind schedule because I had computer problems. So yeah, all right, enjoy the day ahead.